Folks, Washington, D.C. jobless claims are up 200% since 2024. And unfortunately, folks, I think they are going to go higher. Looks like Elon Musk and President Trump are on the warpath. And unfortunately, it looks like a lot more folks in Washington, D.C. will be filing jobless claims over the next several weeks or months. We have Ray Dalio out saying that the U.S. will not be competitive with China in manufacturing in our lifetime. To which I say, Ray Dalio, come on, man. We can do better than that. Warren Buffett out saying tariffs are an act of war. That's not good. We have share of borrowers that are 90 days late or more in auto and credit cards at a 14-year high, according to Yahoo Finance. We have Commerce Secretary Lutnick suggesting that there's actually some good news on the horizon. Perhaps President Trump and his administration will compromise on the Trump tariffs. These tariffs obviously impacted in Canada and Mexico and China. We do have some earnings. CloudStrike came out and actually gave a weak forecast. CloudStrike, obviously, in the cybersecurity area. One of the things that I think we have to talk about, I've had several folks, several of you, yes, you watching right there, actually ask me this question in several different forms. Basically says, is President Trump trying to cause an economic slowdown on purpose? The idea being, if President Trump is looking to cause an economic slowdown on purpose, he will have Jerome Powell and his cronies cut rates. Thus, cutting rates will lower long-term rates, and thus we could build out of this economy for the next 3.5 or 3 years. It's an interesting idea that, frankly, a lot of you have proposed. Again, if President Trump can manufacture a recession in Q1 and Q2 of 2025, it is probably reasonable to say that President Biden gave him that blank sandwich. And then obviously President Trump would have 3.5 years to build out of it. I don't know if I buy it. I don't know that I agree with it. I don't know, frankly, of any president of the United States that would try to engineer a recession or a slowdown. But several of you have proposed that, and it's an interesting idea. Joseph Wang, the Fed guy, been on the channel several times. Joseph, we got to get you back. He is actually out saying tariffs are bullish for bonds. What does that mean? That means rates lower, prices higher. You got to remember bonds have that inverse reaction. Rates down, prices up, and bearish on stocks. Again, according to Joseph Wang, tariffs are going to eat into margin and demand. Again, that kind of a double whammy. We do have the one and only Lance Lambert from Resi Club highlighting Apollo Global Management. Folks, if you don't remember, Apollo Global Management said that in 2025, the U.S. housing market would be up 10.8%. To say that Apollo Global Management was an outlier is an exaggeration. They were 4 or 5x higher than the next expert. Well, they just gave an update to their 2025 forecast, and it's gone from 10.8% all the way down to 6%. Now, folks, don't get it twisted. 6% is still higher than anyone else on the street. Let's talk about U.S. Treasury Secretary Scott Bessent. Scott Bessent saying 4 days ago, he said this 4 days ago, now 5 days ago when you're watching this, the U.S. housing market is stuck. Sometime in the next few weeks, it is going to unfreeze. Now, is Scott Bessent simply talking about the spring selling market? Perhaps. Is Scott Bessent talking about the 10-year note collapsing? Perhaps. Is Scott Bessent actually looking out into the future and thinking that we are going to have lower 10-year rates, lower spread, a recession, the Fed cutting rates, and thus perhaps 6% mortgage rates? Maybe. The 10-year note certainly seems to be on a path to sub 4%, which would make a 6% mortgage rate not out of this world. Again, remember the historical average is 180 basis points. We do have a lot of stuff going on today. We do have more and more talk about stagflation. I have brought you stagflation as an unfortunate possibility for at least the last year, perhaps even the last 18 months. Again, stagflation, what is it? It means you have persistent inflation, aka tariffs and cost passed on to the consumer, and yet you have a slowing economy. Remember, folks, GDP now has gone from 3.9% to negative 2.8%. That is not good. In fact, we have Target and Best Buy, both in the last 24 hours, warn that consumers are going to have to pay more. Both Target and Best Buy, both large retailers, telling us that they are going to pass on any tariff increases to the consumers. When you think about housing, I don't have much good news. Lumber, gypsum, drywall, and appliances are all expected to be directly impacted from tariffs. In fact, builder costs are expected to rise somewhere between $7,500 and $10,000 per house. Folks, that is not good. In fact, lumber all by itself is forecasted to rise $4,900 simply because of the tariffs. EY, Ernst & Young, and Pantheon Economics surveyed 4,000 executives. About 50%, so let's call it 2,000, said that they are going to pass on 66% of any additional costs. What does that mean? That means that they will eat margin a little, but pass on most of the tariff increase to consumers. Good news about the Panama Canal. You've obviously heard probably in the last month or so, President Trump basically say that China controls the in and the out of the Panama Canal. Well, BlackRock has stepped up and they are now buying both the port of entry and exit from the Panama Canal. So no longer will China be in control. Trump, in his address to Congress in the last 24 hours, said, and I quote, "Tariffs will create a little disturbance." Yeah, maybe a little more than a disturbance. We do have Fed President Williams out talking in the last 24 hours, talking about, I don't see a need to change rate policy. Hold that thought. I see very high pass-through rate to consumers. Yes, I think CEOs just said that they were going to pass on 66% of it. Inflation has been gradually easing. Wishful thinking. And I am watching inflation expectations closely. This was, again, a game changer about 2.5, perhaps 3 weeks ago, where inflation expectations hit a cycle high. That is not good news. Folks, consumers will change their behavior if they see inflation coming. In fact, folks, traders, the Fed watch now is pricing in 3 rate cuts. About 6 weeks ago, we were down to 1 rate cut. Yes, again, I will ask, do you think that President Trump and his administration is trying to engineer a slowdown, engineer a recession that he can blame on President Biden? Lots of you have asked me. Let me know in the comments below. Do you think that is what President Trump is trying to do? Make Q1, make Q2 2025 negative, call a recession, blame Biden, and then grow out of it for the next 3.5 years. Folks, Let me know what you think. Again, remember, like, subscribe, comment. We are out and about, but we still want to do the daily financial news. I hope you enjoy it. Have a great day.